I just came from a large conference with public funds looking at what we're going to be doing 2010, 2011. And I think one of the most important questions that they're all trying to address today is whether or not, from an investment perspective, they should be in emerging markets. And I'll try to, if you will, bifurcate emerging markets and then talk a little about Africa specifically. To be in emerging markets, one, you have to know the market, and two, you have to have people on the ground in that market. And that's the belief that we've been sharing for the last couple of years. And one of the problems that we've had is finding statistics and being able to track those statistics. The data is small, and emerging markets, in particular private equity, have in the last 5 years outperformed developed private equity. The problem is that long term, emerging markets, private equity, have badly performed compared to developed markets. And so the question we've got is whether emerging market investing is long term, or is this a trend that we ought to be getting on the train and moving forward on. At the present time, our clients have substantial dollars that they are targeting towards the emerging markets. And we're talking large sums. One of the issues that we've got is whether they should be in, if you will, private equity versus public equity. And I would not be surprised if the dollars coming in were pretty equal, both public and private. With respect to Africa, the pros are that we think that the potential for high returns is very positive. A little bit of history, 2004, 2006, most of our money went into Europe when we were talking global. 2005, 2007, 2008, a substantial amount of our dollars went into Southeast Asia. Today, but for the dollars already committed to Europe, very little US dollars are going into Europe. Still, some is going into Southeast Asia, but we believe strongly that Asia is overly supplied, in particular because the problem with Asia is that the funds are small niche funds, and you can't put a great deal of dollars into any particular fund. So that leaves, if you will, South America and to a certain degree Africa. And like I said before, Africa, we have to have people on the ground, and we have to know the market and track the market. Just recently, I got a call from a couple European funds asking me, and I'm from Seattle, even though we do work globally, who I knew in Africa, South Africa personally. And quite honestly, I don't deal at that level. But that does show you the interest that exists out there with respect to Africa. I would say the following, though, that Africa is viewed as a growth market, and somewhat like what in the States, venture capital. And so the upside in our belief is very high. When we do allocate dollars, they're big. And the other thing that you should be aware of is the fact that when we move fast. It's kind of like little kids playing soccer, and all of them follow the ball. So when one or two move in, you should expect a great number of pension funds to be moving in. As I said earlier, the question is, the question we've got is, do we go public or do we go private? I will say the following, though. The problems that we have are, one, exits. If we invest, how do we get out? Yeah. Secondly, we're still having difficulties with valuations, fund structures, or investment structures. The positive about the public, we can buy stock. The negative about the private is that I looked at 5 deals last year with respect to Africa, And the structure is not, the structures are not what we're used to seeing from an institutional investor. Most of the structures are basically developed from family, spin off for corporations, and so they don't have the sophistication they need. My advice would be that if you're going to be seeking our dollars, you have to become aware of how we place our dollars, the structures which we're comfortable in which we place them, and the terms under which we'll invest.
Doing business in Africa, you can't afford to be without Africa Investor.